Hi, I'm Jesse Schrader, CEO and co-founder of Amboss Technologies, and I'll be sharing with you a presentation first given at BTC++ in Buenos Aires about navigating regulation for Lightning companies. So first, a bit about Amboss. I think what people most know us for is amboss.space. And it's used to search for Lightning nodes and discover new connections on the Bitcoin Lightning Network. Amboss.space provides tools to track industry trends, discover new connections, buy and sell liquidity, and overall just enhance Lightning Network operations. So here's a typical node page, and every node on the Lightning Network has its own page with important stats. It can be customized with contact information and all the information needed to connect to a new peer, as seen down here with a Tor address and also a URL. But most people use it to add contact information and find out additional information about any potential peers on the Lightning Network. Here's one of the most iconic images of amboss.space, which is the channel map showing individual channel connections on the Lightning Network. So my node, satbase.org, is connected to 90 other nodes on the Lightning Network. And you can think of these as each of these like a joint account. So if one or both of us put money into a channel, that can be used to transact back and forth. These are bidirectional channels, and really a joint account is probably the most useful way to think about things. And any payments that are made within a Lightning channel are essentially just updates to a payout transaction that may happen at the end of a Lightning channel. You could kind of think of it like a side ledger for the Bitcoin blockchain, which holds all of the transactions. So any transactions that happen in the Lightning Network are essentially happening in a joint account that has its own side ledger to the Bitcoin blockchain and not publicly broadcast. The other thing that amboss.space has is a marketplace, which we call Magma. Magma is a Lightning marketplace, so anyone that has Bitcoin and is willing to deploy it on the Lightning Network can advertise the fact that they're willing to put that Bitcoin to work for payments. And each of the sellers can price their own liquidity and be able to say how much they'll charge to open a new channel to another peer on the Lightning Network. On the other side of the marketplace, we've added Hydro, which automates liquidity. And we've shared a bit about this in other presentations, but really this is a way to automate your Lightning node, especially for people that sell goods and services on the Lightning Network. It enables them to manage their Lightning node, their capacity, or their inbound liquidity, and that will pull from the Magma marketplace. So it will automatically buy channels from the various sellers on the Magma marketplace, as well as other sources as those ecosystems develop. So this, I'm sure, is a very familiar image, and I'm asking kind of what is this? Really asking for wrong answers. And for those of you familiar with this picture that was in news articles all over the world, this was the Ever Given stuck in the Suez Canal. But really the wrong answer that we're going for is a Lightning startup trying to convince their lawyer that their Lightning product is ready for launch. Really, this is an extremely costly roadblock that holds back commerce globally. So with this immovable object, Bitcoin as an anti-fragile technology is really our way around it. But it's important to keep in mind that regulatory and compliance costs are a significant portion of the financial industry. And I have here 3 different statistics, which is showing that $181 billion are spent annually across the global financial system just on maintaining compliance. For those that choose to not be compliant, those fines paid by banks, and this is U.S. banks only since 2008, amounted to $243 billion. And really, while compliance is expensive, non-compliance is even costlier. We're also seeing increased costs for compliance, and overall we've seen since 2008 60% increase in compliance costs. Now, one of the core beliefs that we have at Amboss is that the technology is superior, which is why Lightning is the future of payments. And really, what I want to share with you is that we all here need Bitcoin and Lightning to thrive, and really we all need it at the end of the day. And one of the biggest decisions that any Lightning builder or entrepreneur is going to make is whether to make their system custodial or non-custodial. And custodial products are often the largest, they're the most user-friendly, but come with a set of rules and regulations. And typically this is based on jurisdiction. But at the end of the day, custodians often take full responsibility for any activity that their node does. Now, on the other side of things, there's non-custodial products. And those are often more technically complex, and they are limited in on and off ramps. That typically has to do with the non-custodial design system, where they push regulatory activity, they push that burden elsewhere, either to the end user or to another provider. So say, for example, someone providing node infrastructure may be operating the node, but then at the end of the day, the person operating the node and using that infrastructure is going to be the one that is responsible for maintaining compliance and maintaining that regulatory burden. With the limited on and off ramps, it typically has to do with, can they get a bank account, or can they actually get past their regulatory partner, the regulatory person. So when it comes to banking relationships, businesses are all often responsible for saying that there's KYC, there's AML, yada yada. But overall, this is kind of what we're wrestling with as builders in the Lightning Network ecosystem. So just a quick background on regulatory. Anti-money laundering, or AML, it really focuses on preventing money laundering and terrorist financing by implementing a set of procedures to detect and report suspicious activity within financial institutions. And the second piece is OFAC, and that is the Office of Foreign Assets Control. And as part of the U.S. Department of Treasury, really it's enforcing economic and trade sanctions to specific countries and regions, as well as individuals and entities involved in terrorism, narco trafficking, and weapons proliferation. Really, this is the U.S. foreign policy, and it also aligns with the national security goals of the United States. The last piece, and this is a growing area of concern for regulators, especially in the U.S., is ransomware. And that's a type of malicious software that is designed to essentially lock a computer system and encrypt files, all until a certain amount of money is paid to the person that is running this software. And typically that's done with cryptocurrency, currency native to the internet. And all you need to know for the explain like I'm 5 is you don't want to do money laundering, you don't want to do terrorist financing, and you don't want to be supporting ransomware with your Lightning software. So this quarter, we did 26 interviews of Lightning startup founders and builders, and we learned a ton. So when we did those interviews, we did a meta-analysis of the notes from those conversations and identified the most common themes. Then the top 5 most pressing problems and desired solutions. So number 1 on that list was accounting and record keeping. Really managing financial records specific to Lightning Network transactions, including transaction histories, ensuring accurate tax reporting, reconciling financial data, and relevant to this conversation, addressing regulatory compliance concerns such as AML and KYC requirements as being a significant challenge. Second is liquidity management. And this is something that we've been addressing through our other products, namely our Magma marketplace and Hydro. And really that comes down to efficiently managing liquidity for transaction processing within the Lightning Network, including balancing channel liquidity, optimizing funds allocation for efficient transaction flow, and managing financial resources in a high-frequency payment environment. That's a significant challenge. Thirdly, user experience. Really, we want to enhance the user experience, develop interfaces that are intuitive, especially for non-technical users, to simplify wallet management and make transactions smoother and address that learning curve associated with using the Lightning Network. And fourth is regulatory compliance. So here again, just complying with regulatory frameworks as they develop, especially in the context of anti-money laundering and KYC policies as a challenge. And then lastly, interoperability and compatibility was huge. So really ensuring seamless interoperability and compatibility with existing financial systems and various Lightning Network implementations. Really including integration with traditional finance platforms. So say, for example, making your Lightning Network system work with TurboTax. But we saw significant gaps when looking at the ecosystem as far as addressing this accounting and record keeping piece, as well as regulatory compliance. So when you miss the mark as far as regulatory goes, what happens? In these interviews of 26 Lightning companies, we found four different approaches and costs. So really the first one was being stuck in permanent beta. And one of the companies that we talked to, they had actually completed a Lightning integration in 2018, but really weren't able to launch it outside of a beta because of regulatory pressure and regulatory requirements that they simply weren't able to meet. The second was remaining bankless or getting debanked. So this is for Lightning businesses that deal with on and off ramps. And those rely on maintaining banking partner relationships. And banks, as they learn more about this technology and as they see more negative news releases, they're increasingly concerned about Lightning Network and cryptocurrencies in general. So really, if you can't get your regulatory policies right, your banking relationships might be at risk. The third that we've seen in the Lightning Network ecosystem is death by compliance cost. So this is where legal and compliance costs just exceed any type of sustainable expense for the company. And that can really break a company if they spend too much on legal and compliance. The fourth is essentially the founders of any Lightning company just saying, forget it, I'll remain anonymous. And what happens is the company operators have to remain anonymous or go dark just in order to avoid enforcement. But privacy is paramount for these folks, and one mistake and you're done for, and you've got a notice waiting for you by the regulatory body or the enforcement agency. So what can you do about this? You can hire more lawyers and compliance officers. The second is you can try to change jurisdictions. But one thing that we've seen is that even the friendly jurisdictions to Bitcoin, crypto, the Lightning Network, even those jurisdictions are developing regulations and increasing scrutiny. The third is align with incumbents. So what we've seen in the industry is that a lot of blockchain analytics platforms essentially win by enforcement and rely on heuristics to get enforcement actions, and a win for them is essentially someone going to jail. Then the fourth tact that we've seen is try to bury your regulator in paperwork. Essentially stack more and more compliance program pages in an attempt to overwhelm regulators and show how much you're doing. Now, you might have heard the phrase, when you've got a hammer, everything starts looking like a nail. But our feeling is that this doesn't really work for the Lightning Network. What you need is the scalpel approach. And the scalpel approach addresses the most pressing concerns of regulators without going overboard. So this is where you would specifically target OFAC requirements as well as ransomware as part of your anti-money laundering program. And what's key here is that you apply a consistent policy that's easy to defend. So really, if you have a lawyer that is defending you, you really want to have a consistent policy that is applied universally, and that is a lot more, as we say, deterministic. And with that, I'm pleased to announce Reflex. And how we used to describe this is confidence in every connection and precision in every payment. So really what Reflex does is it provides a comprehensive, policy-driven payment operations platform for the Lightning Network. And that goes with optimizing liquidity and doing proactive risk management, all to generate actionable insights for Lightning businesses. So how does it work? The first part is checking source of funds. So as we mentioned earlier, every Lightning channel has Bitcoin inputs and Bitcoin outputs at the end of the Lightning channel. So the question that we need to answer in a strict yes or no is, have the funds come from the OFAC list? And what we do for Reflex is actually check the OFAC Bitcoin addresses and see if any of those have moved directly into Lightning channels. And so that would enable us to say a clear yes or no. The second question that we'll ask is, have the funds come from the ransomware list? And there are public ransomware lists maintained by different providers, and you can once again check the inputs to a Lightning channel and ask if those are coming from the ransomware list. So if no to both of those questions, then all of your checks pass. The second piece to look at is the IP-derived location. So every node on the Lightning Network broadcasts an IP address, and there's tools that can be used to derive a location based on the IP address. Now, this is all public information, and these IP addresses are actively advertised by the Lightning nodes. And this provides a way to connect to the different nodes on the Lightning Network. And so the question here is, are my peers operating in a sanctioned jurisdiction? So once we've derived the location, we can also ask the question of whether it fits in a sanctioned jurisdiction or not. And then secondly, are your transactions related to military exports? Now, a lot of the sanctions globally as part of OFAC or enforced by OFAC have to deal with military exports. And so really this comes down to knowing what your own transactions are about. Are you selling military equipment on the Lightning Network? If no, then that check passes. So if no to both of these questions, then essentially all of your checks pass. And then lastly, and this is dependent on the policy that you would like to implement as part of Reflex, is to check associations. So every node, including my own, has connections to different nodes on the Lightning Network. And one check that you can apply is when checking my node, for example, you might check who I am connected to. And we can ask 2 additional deterministic questions. Is, do my peers have connections to OFAC funds? Yes or no? And then, are my peers connected to sanctioned jurisdictions? So, yes or no? If no to both of those questions, all checks pass. And here, what I alluded to earlier is a workflow. So you can customize which checks you would like to apply. So do I care about OFAC funds? Do I care about ransomware funds? And do I care about the location or associations that a given Lightning node may have? So I can customize what types of checks I would like to implement and then construct a workflow that would be consistent with the business policy that I would like to implement for my business. All of this can be operationalized via the API. Now we can go and apply this to individual Lightning payments. So say, for example, I'm running an exchange and a user has requested a withdrawal. So in order to request a withdrawal, they'll present to me, the exchange, a Lightning invoice. And I can use Reflex to check whether the destination of this invoice passes all of my checks. If yes, I get a response saying that all checks pass and that this is okay to pay. And lastly, I think this is my favorite part of Reflex, is the ability to generate reports. So really showing the fact that you've set a business policy on what to do for your anti-money laundering program or other business policy program, and you've been applying it to your node peers, your channels, as well as any of the payments that you've been making. So really this documents all of the activity that you've done to really prevent any type of association to money laundering activity. Now, this enables you to have something quick that addresses regulator questions directly, and then you can get back to building. Because at the end of the day, the Lightning Network ecosystem wins when there's more products, there's a more robust ecosystem out there. We want Lightning Network to win. So in order to sign up and learn more about Reflex, you can go to rpo.dev, and that's reflexpaymentoperations.dev, and that will share with you all of the information needed to sign up for our beta, which was launched at the BTC++ conference in Buenos Aires. And with that, thank you so much, and feel free to reach out with any questions or concerns about Reflex and whether it would work for your business. And with that, thanks so much.